Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Monday, we will be waiting for some economic headers to be released from China. From the United States, there are no important economic headers to be released. We just have to pay attention for the US dollar movements and the US equities movements as well. That's all for the economic calendar. We'll move on now to the numbers. On the last trading session of a Friday, we have had a trading range from 1516 to 1533. Numbers are rounded and the market is closed. Gold spot printed a close price above 1520. The number is rounded and the market is closed. Gold is trading on a bull trend above its all daily simple moving averages, and what matters for us is the 20 days daily simple moving average as a first point of contact, which is located at 1516, and the market is completely bullish above 1468. We are overbought on the weekly and monthly charts with high readings, and the first support is seen at 1516, followed by 1505, then 1490, and also 1500. And the first resistance is seen at 1522, 1525, 1535, and then 1540. That's all. We'll move on now to the strategy. This is the weekend video, and it's going to be long for the fact that we are going to talk about so many things to help us understand how to trade the coming week. Gold, as we said in our last two videos, and as concluded from the price action, is going through a correction. We got what we were expecting, and we got a shooting star on the weekly chart, which is suggesting two things. The first one is that there was a clear rejection, and the second conclusion is that the price is expected to slide further in the coming trading sessions. I wasn't actually shocked since my study pointing to another leg down where gold will test again 1490 for the last time for so many years to come. Then it will march forward towards 1600. I hope I'm right with my calculations, because if it's the case, we are all going to be extremely rich. With a correction or without a correction, gold remains bullish. No one needs to open up his or her appetite for a big sell, because it's not there yet. The world is on an edge of one or more than one crisis to happen. If one of them materializes, it's enough to send gold to 2000 comfortably. I could figure out that we are heading into a correction because we've got a series of lower highs, lower lows, and we got also the bulls let their guard down onto two important levels, 1525, 1522 in the last trading session of Thursday. Moving on, we are going into a very tricky week, and I'll explain you why. It's tricky, and you have to make yourself ready to see high swings in the price in both gold and silver. Before going into our core analysis, we are going to have a look at a case study and use it as a platform to understand some issues that soon may become the talk of everyone. Our case study is about someone called John, who happens to be a resident in the United States. John works for XYZ company for $60,000 a year. He got a portfolio of stocks that is worth of $100,000 that yields him about $12,000 of dividends income a year. And he does a side job that pays him about $24,000 a year. John, as you may have noticed, does have a bright life, but that's a part of the story, not the whole story. John has a mortgage for his home of $80,000 and two car loans of $35,000 and some credit cards of $20,000 credit limit. In total, John makes $96,000 in income yearly, and he owes banks $135,000. In order to make sense of this case study, we have to ask a couple of questions. The first one, what happens if one of John's resources of income got him less money? Let's say his portfolio of stocks, for example, yielded him less dividends, not 12,000, 6,000. That is what we call it a slowdown. In this case, John has to tighten his expenses and let go some luxuries. The second question that we have to ask on this case is what happens if John lost his main job that yields him $60,000 a year and couldn't find another job? That is what we call it in economy a recession for John. He is going to fail his banks and he will let go his assets one after another to survive until he gets his things back together in order. What applies on individuals applies on governments as well. The debt of the United States reached to a huge figure, which is 22.5 trillions, which is about 1.05% of the GDP of the United States. Being in the place of the United States as the biggest country in the world and in the history of the human race, it still could be reasonable, and the United States could still be borrowing more money as long as its GDP is growing. But what will happen if a slowdown or a recession took place? GDP will fall and borrowing capacity will be less, especially if the Federal Reserve Bank lowered interest rates in the hope to avoid the recession and to survive or rescue the stocks markets. The US dollar, most likely following to these events, will lose a huge amount of its value and it will lose its appeal as a reserve currency, and the debt crisis will surface up with very limited solutions in hand of the government of the United States or the Federal Reserve Bank of the United States to solve the problem. The real question here is what's going to happen to John if a recession hits states or a global recession hits all over the countries of the world, including the United States. What John is going to realize that the value of his home is less than his mortgage obligation. He will realize that his cars is also less and less value than the car loans, and he will also realize that the portfolio of stocks that he owns maybe lost 50 to 70% of its value. So there is three important advices for everyone who is residing in the United States or any place else, because this expected recession is a global one. First of all, avoid buying any real estates until a recession happens, really, then you can go ahead. Move on your cash or extra cash in hand and exchange it into hard real money, gold and silver, and keep only the minimum that you use for daily life. And most importantly, also build some sort of reserves that can cover you for 3 to 6 months at least. Technically, gold is trading in a bull trend above the trend line and above its daily simple moving averages. Gold closed the week with a shooting star on the weekly chart, indicating that further slide could be on the cards in the prices. The interesting part is that the three major indices in the United States ended the last trading session with a rejection from the 50 days daily simple moving average with a shooting star. If you may have a close look at the three major indices, you will see that they are stuck into two. The top is the 50 days daily simple moving average, and one at the down is the 200 days daily simple moving average. A break from any of the two handles is going to create an extreme move in the price to push the market somewhere else, especially if it happened to the downside. So many analysts, including me, we do believe that the stock market is going into deep correction, something like a Black Monday, which is expected to be, by the way, the first week of September. But we don't know yet if this going to take place or no. If a correction in stocks happens, it's going to be helpful for gold. The harsher, the better. I'm talking now about what is the better for gold. Otherwise, we could see gold to continue its correction with 1490 as ultimate target. If we break from 1490, I believe the rally needs to be again checked up for reassessment. Look for a value dip and don't have any hesitation to buy no matter what. Gold will be like a basketball, will keep bouncing up. If we reach to 1450, it will come back again to 1520. This is 100% sure. It's a must technical that it will come back. So buy confidently. Gold got so many reasons to come back into play. We got the trade talks, Brexit, India and Pakistan, two nuclear armed neighbors, and could lose it at any moment. We have China's troops 1 mile away from Hong Kong, and we got the negative yields and the shaky stocks markets around the world. Add to that Iran and the rising tension in the Middle East. Make sure to switch all your paper currencies into hard, real money at this round of correction. This would be maybe the last call for exchanging your money into gold. Finally, have a look at the Euro USD. I have talked so many times about it. I'm super excited about the Euro USD, and I have my reasons for that. It's selling at a huge discount. It broke already the 110 handle, and I see it's a very good deal. I am held by my word. Euro USD is going to be trading around 120 February or March next year. However, I see it's a very good chance to accumulate a small quantity of Euro USD and keep it for the time. Thank you guys for watching this video, for having the time to watch this long video actually. Please share it and like it, and subscribe to the channel if you did not yet, and I will see you tomorrow in another video.